everyone. Hello, everyone. Welcome to our latest Your Money and Your Life Facebook Live. I'm David Koch, and I'm here with the bill genius, the bill guru from Compare the Market, Chris Ford.
Oh, David, I don't think I've ever had that as an intro. I think I'd be overstating it. Always learning, always learning.
Yeah. No, I am going to pick his brains mercilessly today on your behalf. And Chris is here to answer your questions as well. And also, we have Aleksandr Orlov too, our trusty Meerkat. Previous Your Money and Your Life Facebook Live sessions, we've had a lot of questions saying, where are the Meerkats?
Yeah, we got him.
Aleksandr has joined us. Hello, Aleksandr.
Thank you, Alex.
All right.
And Meerkat socks, I believe.
Yes, Meerkat socks I've got on today as well. So I'm right. I'm feeling the inspiration from the Meerkats to look after your bills, because this session is, we've titled it How to Be a Bill Genius, What Your Providers Don't Want You to Know. And Chris, it is a big deal, isn't it? The Compare the Market Budget Barometer that recently came out said 93% of people still say we're in a cost of living crisis.
Yeah, I think it is really reflective of what Australians are feeling right now. It might have moved slightly out of the news cycle, so to speak, but we're still really feeling it. And it's a number of key items in the household budget that we are. And look, today also coincides a really important day. CPI figures out shortly, and that could be indicative of what 2026 will feel like for Australians over the next 12 months.
It's going to set the tone. So for the next 45 minutes to an hour, we're going to be able to take your questions, but the agenda that I want to get through to today is, what do you do when your bills come in? Do you automatically renew? What's the dangers of that? How to be smarter when comparing your bills. Loyalty discounts sound great, but do they actually deliver to you, the consumer? So they're the things we're going to go through. And we're basically going to go through some of the big five bills, aren't we?
Yeah.
We're going to go through your energy bill, car insurance, home and contents insurance, private health insurance, and your home loan. So we're going to give you tips on how to get the best deals from those big bills, because, you know, remember one of the Your Money and Your Life case studies in the last series, in Koch's Budget Challenge, we went into one family, we saved them $9,000 a year just going through their big five bills.
I mean, it's
big savings.
It's changing lives, really. And I hope that's not overstating it. This is a real significant change for families, not just for that moment there, right? You know, $9,000 or best part of, but think about those habits and behaviors that are changing over the next years, how that passes on to the next generation. So really important stuff.
Yep. All right. Let's do a general setup, if you like. What's your best advice in terms of comparing bills?
Look, it sounds so simple, but you've really got to pay close attention to those ongoing expenses. And there's the big five. It sounds like we're on safari there, but the big five that you've gone through there, your home loan, your energy, your insurances, etc. But there's so many other things in there, like subscriptions. So many things that just drift beyond the ether, and we're like, oh, hold up, I've picked up 6 different streams.
They're like financial leaks out of your budget, is it?
That's right. And think about then within your groceries, which we might touch on as well. There's all these different ones, and it's the scrutiny with which we can apply. And I always try and say there's a couple of things. You think about your home and contents, right? There's the policy, think about those policy, and then there's the prevention, sort of the two P's of it as well. And some of that prevention, it might be some weekend work around the yard if you think about your home and contents, but it could be some weekend time, dive into your bills and just go, look, I've got to do that audit and spend a couple of hours.
The common thing for me is, it's so much hassle and it will take too much time. Yeah, the two reasons that people say, I couldn't be bothered comparing bills. Well, you know, this example of the $9,000 we saved for a family, husband was a truck driver, wife was a small business owner. We saved $9,000, your team did, and you reckon it took 2 hours to do it all. So they made $4,500 per hour of effort. That's not a bad trade-off.
Look, you find me a job, as we often say, that would pay that equivalent, and you're going to be hard pressed. I mean, I think the reality is we're not always going to be able to find that in every situation, but it's the persistence in going there to make sure of it. I'll give you a very recent example, Koshi. My own home and contents insurance, and
And you're a bill guru.
That's it. I'm on top of it all the time, but I had a renewal that came through. I've really shopped around every year for it. It came through. It was a 146% increase year on year. Now, I live in this world, so
Yeah.
I know what to do. But I know that there are people who just see that and go, oh, well, I guess that's the case. That's the way it is.
Everyone's doing it.
So now next year, that might not happen with the same increase, but I've got to use that as the impetus to go, all right, I need to spend an hour.
So what was the outcome?
Well, the outcome of this particular home and contents one was that I said, no, thank you. And I went on, took about 30 minutes, had a little bit of a shop around myself. I actually was able to adjust the coverage, reduced my excess from what it was in the previous policy, and managed to keep the price premium for the same year on year, but switched providers.
Yeah. So by switching providers, you save yourself $2,000.
It was actually probably closer to $4,000, if you like.
In half an hour
terms, and it was about half an hour's work.
Wow.
Yeah.
Because the other thing your budget barometer showed that people are coping with the cost of living crisis by cutting back on the holidays.
That's right.
Cutting back going to restaurants. Like you make $4,000.
Well, that's a
half
holiday.
an hour. That's a holiday.
That's a holiday. Yeah.
So you would
exactly
go.
Right.
Now you have to cut in the future. Now you can go on it.
Yeah, and I think that these are decisions that families are making potentially unknowingly. So that's why this is a really important conversation.
Before we get into specifics, we're going to kick off with energy bills. And remember, this session will stay on Facebook Live, stay on YouTube, TikTok, the whole thing. So if you don't have a bill in front of you at the moment, you can actually go back and you'll be able to go back and follow us through again with bills in hand if you don't have them handy at the moment. Loyalty discounts. Big thing on renewals with insurance policies. My mum always says, oh, they're looking after me because I've got a 5% or 10% loyalty discount on my premium renewal coming through. Do they mean anything, or is it just a marketing exercise?
Look, realistically, generally, they're a marketing exercise. They can mean something and they can be beneficial for you. It depends on a whole number of factors, but don't just see that and assume that you're getting, the best possible option for you. You should never assume that. Always stress test it, even if it says it there, and it might be a 10, 15 week. We've seen some upwards of 20% discount from a loyalty perspective, but still, there were better deals available elsewhere.
Okay. So, and far be it for me to be cynical to say, well, they'd build that into your premium increase anyhow. But let's not say. All right, let's go through some specific bills. Don't forget, if you've got any questions you want to send through, we can answer them, and whether it be TikTok, Facebook Live, or on YouTube. All right, energy bills first up. How to find a good energy offer or know that you're on one at the moment. Because if you can't find a better offer, you go to sleep at night and go, okay, I'm on a good deal. That's terrific. And half your luck. Go through an example electricity bill for us. What makes up an electricity bill?
Well, there's a number of factors with electricity. And in fact, it's not necessarily consistent across all residents, Australia, all sort of energy users across Australia. But there are a couple of key things. One thing I'll probably start off by saying, if you've been with your energy provider for more than 12 months, it's very likely that you've shifted onto what's called a default market offer or a Victorian default offer. Now, there's different regions here at play. Southeast Queensland, New South Wales, South Australia, and then Victoria for the Victorian default offer. Less so competition in Northern Territory, WA, and Tasmania. So that's a key point. You're signing up for an offer for 12 months. Those discounts will apply and those rates will apply for 12 months.
So if you signed up for a good deal, a special deal, and you're going, you beauty, I'm going to be on that same deal into the future. At the end of 12 months, it lapses.
It could roll off. That's right. And there are different deals here. You might sign up for a fixed rate. You might sign up for one that's 36 or 48 months. But whatever that deal is, it will expire. In my instance, I was actually recently with Ampol Energy. They sold to AGL. I get rolled over onto an AGL as an AGL customer. I've then got to reassess whether that's a competitive plan. But there are different little bits and pieces that you need to look into. I mean, the key ones are going to be a daily supply charge. Basically, how much does it cost you to get energy supplied to your house? And that might range anywhere from $1, potentially less, $1.20, we see higher than that. But that difference, you might think 20 cents, but over the course of the year, that's really going to add up. So that's just really your supply to your house. So check that one first. And then there are the usage charges, and the usage charges do vary.
Okay, so they're the two numbers: supply charge and usage.
Usage charge
are the two numbers to look out
for. And when I say the usage charge varies, I should clarify that. I mean that there are then time of use charges, there are controlled load charges, there are so many things unique to your property. So there are prices within that vary as well.
And time of use charge depends on your habits, isn't it?
Well, that's right. And those are charged alongside sort of peak hours normally. So where you'll see a higher price in a peak period and lower in a non-peak period. So think during the day. So maybe you could, schedule appliances, your dishwasher, your dryer, etc., to run in those off-peak periods.
But if you work 9 to 5 out of home,
yes,
you're only going to get peak
outside of those hours.
So you look for the best rate there.
Yes.
If you're a work from homer and you can do your washing and all that sort of stuff during the day, then you're on a different rate, aren't you?
That's right.
So tailor your energy bill to your rate. Should you bundle gas and electricity together? Seems easy, a lot less hassle. Usually the energy provider says, I've got a great deal.
A little sweetener. Yeah.
Does that work out?
Look, it can be a bit of a convenience catch. It really can. I separate mine and look for the most competitive plans available to me for my gas and my electricity and run them separately. Look, there's going to be instances where that might be more competitive for you. Often we sort of find that maybe they'll throw in a bit of a teaser with your electricity, but then hit on the gas. But it's worthwhile investigating. The other one that I should touch on with your electricity, and we've seen huge uptake in this over the last 24 months, even beyond, is solar. And now there's the incentive from the government came in July around solar batteries. People not making the most of their solar in terms of their feed-in tariff. So what they earn from their energy retailers to export back to the grid, that number can really vary on your bill. And, we're talking some of the lows are around 2 cents per kilowatt hour. Well, you could be earning 12 cents per kilowatt hour. Now,
six times more.
That's right. A big difference. And it's really worthwhile paying attention to that if you have solar, first of all, maximize. If you've got a battery, maximize your solar that you are generating for your own property. But when you're exporting, you want to get bang for your buck.
Okay. Tell us about the best offer box.
Yes.
That comes on every bill, that whenever I tell people about this, I reckon 9 out of 10 say, I have never noticed that before. Just hold up. You've got a red energy.
I do. It's so funny we've taken this long to say about it. Normally it's the first one that we love to discuss.
It's the easiest thing to do.
Now, it's obviously going to be quite small there on your screen, but it's a little box here. And there is actually
Which is right next to the amount you've got to pay.
Isn't that where your eye? That's where your eye line goes, isn't
Everyone goes, I only look at that, how much to pay and what day to pay. I've never noticed that box.
That's right.
But it's right next door to it.
Now, in this individual, we sort of had to anonymize it here a bit, but this individual, it says, based on your past usage, you're on the best rates. That's available to them from this specific provider. That's not necessarily indicative of all providers.
No.
That's just this specific provider. And now this one, because you sort of mentioned it, but it won't necessarily come on every bill. There is some regulation. It could be every 100 days your retailer has to do it. Some retailers are doing it every bill. But if you get your bill monthly, it might not be on every month. So dig through a previous one as well, just to ensure that you haven't missed it.
Yep.
Because regulations do vary, and how retailers are applying that rule is slightly different as well.
Okay. All right. That's energy bills down. The first of the big five. Don't forget, if you've got any questions, comments, send them through to us.
Can I rip it up?
You can rip it. Go for it.
Oh, beauty.
As a bill genius, you can do anything. All right. Car insurance.
Yes.
Why does car insurance premiums go up when your asset, your car, is depreciating in value?
It is such a good question. That it is complicated, and we have to try and answer this for a number of customers over the course of the year. I mean, the number one thing is going to be in maintenance, the cost of repairs, and then the increased cost of repairs. That inflation on parts, and then the cost to repair. So the actual labor to do that has increased over time. It is a really tough one to swallow though, right?
Yeah.
Because you're going, hold up, I bought this car for 25 grand. It's now worth 20 or 18 when I drive it out the door, but my insurance has increased year on year from when I first bought it. So
Yeah.
that is really the core reason there. And we're going to tend to see some premium increases go up. There's other things that go into it. As well from particular insurers, because now we're in a risk-rated category with car insurance, same with home insurance. So other factors at play, the likelihood of those cars or incidences with those cars, if there's increased claims over that period, those assessors applying that, or those insurance are applying that sort of assessment over that car as well.
So how do you know you're on the best deal for car insurance? First of all, I suppose you've got to give the insurer the right details.
That's right. Yes. And these details can change year on year. And I think we sort of forget that in a way. Like we think about now the transition to a work from home environment, and maybe your split's 3-2, but previously you might have set up your insurance to that you were driving 15,000 kilometers a year. That's sort of the average. Maybe you were driving less than that. Well, you can actually adjust that and update your policy, and that might bring your premium down. There's other factors at play there. The age of your drivers. Maybe you've still got kids listed on there, but they've moved out of home. Maybe they've ticked over and they're above 30 years old now. Well, add an age limit on there as a 30-year-old driver. So things change year on year that you should go in and really prosecute.
If you've added a carport or a garage.
Exactly.
Make sure
right.
It's going in there. So when a car insurance renewal comes in, what does your eye go to?
Well, first of all, I'm going to look at the premium year-on-year increase. So that should be displayed now on all premium renewals. So you look at what your premium was for the prior year, and then you can look at it for the year ahead. They're not going to tell you it in percentage terms. You might have to do that calculation, but you can look at it in dollar value. Then I take that premium and I push it against what's available on the market. I'll try various options available, and I'll assess. And it might be that my renewal offer is the most competitive. I had one recently for a vehicle, and it was. So happy days. You said before, all you've wasted is your time. I can sleep content at night knowing, well, it's taken me 15 minutes, but I'm on a good deal.
So my mum, obviously I'm old, so she's really old, still has a car mainly for, independence, peace of mind, that sort of thing. Probably would drive less than 500 k's a year. I just saw it on her kitchen bench on her island at home. She lives independently. A renewal for a car insurance for $2,300 a year. And I went, have you ever checked this? No, I've been with the same insurer for 30 years and I get a loyalty discount every year because I appreciate my business. I said, okay, let's go and compare the market and take a look. Got a quote for $730. $2,300 a year to $730. And her first question, because she's a cynical mother, goes, what sort of dodgy insurance company is that? I said, well, it's the Woolworths Insurance Company, the Everyday Rewards Insurance Company. And if you switch to that, you get 10% off a grocery bill every month. Well, she was over the moon. And now every bill comes in. Home and contents, she was on the best deal. Sleep, peace of mind. But she saved $1,500 just on her car insurance for checking around.
And I think we sleep on those things, right? Because we might go, oh, well, it looks like it's only increased a couple of $100 over the year. Maybe that's the going rate. But it is really worthwhile checking because the difference can really be significant, hundreds, if not in this instance, thousands of dollars.
But it is a big bill.
They are big bills.
So how can you reduce your premium? But a lot of people say, oh, it's not worth it. Hey, insurance is absolutely not worth it until you've got to make a claim. And that's why you should always have some sort of safety net insurance there. So how can you fiddle around with the premium with excesses? Agreed value, market value difference. Explain that for us.
Yeah, no worries. So in terms of your car, first of all, have a look at your excess. So excess is how much you need to pay in the event that you need to make a claim. So you've had a prang, you're at fault, and you need to pay that claim for that repair. So you can, normally standard now, say 900, maybe 850. You can nudge that up to 1,000. And what you will see is a reduction in your premium. It might be in that sort of type of move. It might be, 50, maybe even 100 $100 over the course of the year, but you can lift that even higher. You've then got different things, yes, like agreed and market value. And now this is a
So
really
what's the
interesting
difference?
one. So agreed value is basically you getting into an agreement with your insurer to say, look, I've got a Toyota Corolla, it's 2007, I believe it's worth 10,000, or the insurer says, we believe it's worth $10,000.
Right.
And I go, no worries, agreed that if there's damage to it, it will be paid out to the point of $10,000. If written off or if claims under, then it would be covered. So that's agreement. Market value is that they take a look at the market at that moment in time for that Toyota Corolla. And look, let's take this as, during COVID when we couldn't get our hands on new cars, used cars, especially utes, were sometimes even increasing in value, but we're holding their value really well. So there are instances where you want that market value, but there might be comfort in knowing, well, that's the agreed value as well. But there will be a difference in what that premium will be for the agreed.
Okay, what's the most expensive? Would be
normally it's market value.
Market value,
But that's not always the case. But I would tend that's more common than not.
And increasing your excess.
Yep.
Will have what impact? How big an impact on your premium bring?
Look, if you're really cranking it up to say $2,000, even $3,000, depending on the insurer, some have different limits on what that excess can be, but it can be hundreds of dollars that you're bringing down, bringing down your premium, because you got to think that insurer's then got the comfort of knowing they're going to get that $3,000. And the reason there is an excess, and I think there's always a bit of confusion about this, going, why do I'm paying my insurer, then I'm paying them again for the excess? It's actually to reduce down the volume of claims, people making claims for something that might be inconsequential.
Scratch or whatever.
Exactly right. So it sort of reduces that work and in turn reduces your premium. If you didn't have an excess, your premium would be higher.
Understand though, have it in your budget, have it in your emergency fund.
That's right.
That amount of excess that you're going to have to pay if you make a claim.
Well,
that upfront.
We might be shifting into sort of home and contents now, but I can actually tell you a story as recently as Sunday. I live in southeast Queensland, terrible storms up in southeast Queensland, and unfortunately my neighbour, a lovely guy named Bill, had a gum tree fall on his property, and it has done significant amount of damage. And Bill was telling me the story that he recently switched insurance because he's got his premium renewal through and he switched it down. These are the conversations neighbours have on the street. Poor guy's got to be neighbour next to me. But gum tree's fallen down. That was Sunday evening. Monday morning, the insurer was there cutting the tree off his roof. They beat the SES, which was incredible.
Wow,
the SES are doing
good.
sensational job. I have to make specific mention of that around the area because so much work going on. But they chucked the tarp on the roof. They're up there, and then that claim is then underway. And now you talk about a grudge payment. You've just had however it's all 25 odd meter gum come through your roof. It's done a lot of damage.
Yeah.
Like that is a necessity. Like that is, he is so thankful that he's got that cover at that moment in time.
All right, before we leave car insurance, couple of comments coming through. No, don't apologise, from TikTok, from Facebook, the whole thing. Do you get any rewards for being a good driver?
With some insurers you do. With some insurers you do, and some insurers you can actually be rewarded if you do sort of safe driver programs, that type of stuff. Some of those no claim discounts are starting to wash their way through. What they're looking at then as you go through sort of their quote journey is, have you made a claim in the last 5 years?
Right.
So not necessarily a claim discount, but there's sort of a penalty if you have made a claim in the last 5 years.
Okay. There's a comment that storage of a car is no longer being looked at by all insurers. Why is that? And is that an easy thing to check?
Well, it will depend on the insurer. I can't say I'm actually 100% that it has been dropped, but I would just go through and look and fiddle around on there yourself. There's no doubt that parking on your street in some suburbs is going to be a higher risk for some insurers. Events of claim rather than parked in a garage where it is potentially more secure. So, really, when you go through those web experience quote journeys, have a little play, toggle on, toggle off, but only do so with what is actually true to your circumstance. Don't sort of make a little fib here or there because you could get caught out if you had to make a claim in that instance.
Okay. Question from TikTok. How many insurers does CTM have on their panel to choose from?
It's going to depend on the vertical. I think that I'd probably have a cover-all thing that we encourage all insurers to participate in comparison every year that it goes out.
And that's worth understanding. Every insurance company is invited to come on the comparison site. So you'll find some insurance companies will go, oh, well, we're not on there being compared. Question from a customer should be, well, why aren't you there? You've got something to hide. Aren't you competitive? So that's why there might be some big ones missing because they don't want to be compared with their competitors. So
yeah, I think it just creates that extra work for the consumer, right? And look, that instance
well,
is
at the
true.
back of my mind, I'm thinking, well,
What
obviously you're not competitive.
Yeah, I think for car and home, it's we want to be more we want more partners on board there. There's no doubt for car insurance and home insurance. So it sort of varies. It might be 6, 7 for car. There's periods. It depends on where you live because some insurers only want certain cohorts,
Right.
and or are available in certain states or cities.
Yep.
And the same for home insurance. But then you look at, like say, health insurance, and there's really good market coverage there, sort of 90% of those available. Energy really strong as well. Home loans really strong, with very similar coverage.
Right.
All the big
But
banks, a lot of
even
challenges
the
as well.
minimum comparison would be 6 or 7.
That's right. Yeah, and I think
So-
what you got to
Pretty good cross section.
I think there's different business models, and and there's going to be different ways that you're going to funnel in to shop around for that experience. What we like to think of it is it's a sort of a digital broker that's going to be in your corner, and there's a lot of those around, but there are different models that different have. So to be really transparent on how we make fees, it is only upon that sale for that insurer. It's not necessarily some of the click models that you see where you click a link and unknowingly there's a transaction going on in the background between the insurer and the referring click. So it's one thing to look out for.
Right. Is insurance for driving gender-based?
It can be. It can be for your car. There's different assessment. Often it's 18 to 25 males are a higher risk. So females assessed slightly differently. Again, they'll be looking at that across the different cohorts, the different postcodes around who is more likely to make claims. But yeah, very often we see those younger males making some of the more claims, so therefore a higher premium.
Okay. Before we get on to home and contents insurance, keep the questions coming. We'll get through as many as we can related to car insurance. Fuel prices, difference in fuel prices. The market barometer, budget barometer, found Aussie spend around $3,000 a year on fuel. That's a big expense. Why do fuel prices change, and what is the fuel cycle?
Yeah, a really big bugbear for me, actually, personally, is the fuel price cycle. Now, it's different across different states, but let's just take the East Coast, Melbourne, Sydney, and Brisbane. It's sort of like a 5 to 6 week cycle, and it will have a peak, and then it will trickle slowly into a discounting phase, and it's sort of concentrated often in pockets of the city, and there's other pockets of the city which are on average more expensive. And then there's Adelaide and Perth, which have a slightly different cycle. Normally, it's sort of fixed around sort of 3 weeks thereabouts. Now, it's largely aligned with the oil price. We hear conversation and sometimes suggestion that it's not, but realistically, if oil prices come down, then that should funnel down to us at the pump with lower prices. But what we've seen over the last, say, 6 to 8 weeks is oil prices have come down about 10%. But we've now got very much used to prices being over $2.10 or average of $2.13 a litre. So these high prices have stuck around despite oil prices. Yeah, we've seen some climb. There's been uncertainty around it, but we've seen oil prices just cool off a little bit. We haven't seen that flow through the pump. So it is a bit of a bugbear because the margin between the wholesale price, so basically what retailers would buy it for, and the pump price is now, like we were talking about, an average maybe of around 20 cents a litre. Now it's sort of pushing 50 cents a litre, that margin. So that's a big gap.
Shop around because you've got your apps now.
There are a number of great apps available. Compare the Market does have one, but there are a number out there as well. No slight on the shopper docket discounts, but really if I'm saving 4 cents a litre, if I'm filling up a 50 litre tank, well, great, that's $2. The big difference is going to be if you can find a difference of 50 cents a litre.
So I live in Sydney, have a pretty big commute every day into the city. The difference is one little pocket of service stations there, 4 of them together, which are by far the cheapest on my commute. I always fill up there. My wife, Libby, accuses me of being fixated on sort of getting every drop out and waiting till I pass those. Some days it's 40 cents a litre difference.
Yeah.
40 cents from the ones around where we live to halfway on the commute.
It is
That's a huge amount.
I mean, you're talking then you're going to start talking $25, $30 a litre difference, and yes, those apps are so simple. Before you drive, make sure it's before, not whilst. Check, have a look if there's one on the route. Often we say it's one suburb or one street away. There are instances where I have been at one station looking at one down the road. We're talking 100 meters down the road, and that difference is 40 cents a litre. So do take that time, because that is one that you can really carve back quite easily.
Okay, let's get back to home and contents insurance. What to look for on your bill? What numbers matter?
Yeah, I mean, again, it's going to be your year-on-year premium increase. So that'll be displayed. It has to be displayed there in dollar value, it going up. There are different things that change within your home and contents as well. We've seen that building prices have increased since COVID. We're talking huge increases for your building costs. So do check that your sum insured is appropriate. Like, take the instance of my neighbour. If he hadn't adjusted his sum insured and it had been maintained since pre-COVID, then he might be underbaking what is, not a total rebuild, but a significant sort of reconstruction of it. He might not have been, that might not have been appropriate. So there is going to be instances where you could be underinsured. So do check the sum insured as well. It's not a really nice pill to swallow, because increasing that sum insured is going to have an impact in increasing your premium.
What about the contents, value of your contents as well? Are people overestimating that? That was a big thing. Again, I've become the bill guru for my mum, and checking her home and contents insurance. Hers was up to 300 grand. I said, okay, let's do a bit of an audit. You've got really old things.
You've got the Picasso in the corner.
Yeah.
You've got the
You got none of that.
you got the tiara from the Louvre. That one that's gone missing. Yeah. I mean, look, you're right. I think there's generally, when you start to go through that, things could be overvalued. I mean, I shop at mainly IKEA and Kmart, so my contents are interchangeable. But yes, I think go through that. You got to think of other things as well, though. There's going to be your floorings and stuff like that might otherwise be covered in your contents. There might be jewelry, and yes, I'm joking obviously about the Louvre, but say wedding rings, engagement rings, things you might want to be portable. Covering that under your contents insurance can be a really good thing to do. And specifying those specific items, so they're going to have an impact. But yes, I'd go through and go, okay, what is the replacement cost of a couch or a TV and the like. Now, this is going to be really general in nature, and I have to really stress that. But what I think about now, if I'm thinking about what's going to come down in a fire, what's going to come down in a big storm, or if there's burglary or something like that, I think about, okay, how much would I be comfortable to pay as an excess in the event I had to make a claim? Take my neighbour. If my excess is $3,000, I'd say, thank you that I've got insurance, and I'll pay that $3,000 every day of the week. Like you said, make sure it's parked away and I've got the money to make that excess and pay that claim. But the other day, I chipped a window when I was mowing the lawn, rock cracked out, window is chipped. Look, I'm not going to make a claim for that. So I'm not going to pay that excess. I can repair that window separately. So being a bit pragmatic with that, and then pragmatic around, what is around the home, how can you value it, what would it cost to replace?
Okay. Excess, fiddling around with that helps as well.
That's right. Yeah. So it's been a habit of mine that I might lift it up from 1,000, try it out at 3,000. I've gone up to 5,000 before, so not in all insurers would go up there, but I can bring it down. You could also go lower if you're not comfortable with that and you really wanted to have that peace of mind. It's going to have an impact on your premium. Look, home insurance is really one to go through with a fine-tooth comb. Flood cover, not always included. We've seen an increased risk of flood. I think there was an Insurance Council of Australia report out recently talking about 1.4 million homes at risk of flooding across Australia. That's significant. So if you do want flood cover, make sure it's included, because not all insurers will have that as standard. And then other things. There's, a really great insurer. I think you spoke to them before, where they've got sensors around your front door or around your flexi hose. And because some of the most common claims are water leakage. As part of the sort of budget barometer, we looked at those who've made claims. There's about a quarter of us Aussies that we surveyed had made a claim in the last 5 years. So much of that was around to water damage. And often that's that flexi hose that's underneath your washing machine.
Yeah.
It breaks, your place is going to get flooded in no time at all. And then you're having to make that claim. So there is an insurer that now offers a discount if you install these sensors. It basically alerts you via your smartphone. There's a flexi hose that's broken. This is Honey Insurance. And they've got some other partners that they deal with. Aldi Insurance, BOQ, I think from memory as well, that's part of that. So they will they'll send an alert. You can get home, switch off that hose, and maybe minimize the damage.
A lot of people will say, "Oh, that's great, Honey. Never heard of it in my life."
Underwritten by RACQ, so one of the motoring bodies. So
because a lot of people say to me, "Oh, just stick with big brands, big insurance brands, because they're safer." They're all regulated by the same authority, aren't they?
It's a funny one, isn't it? I think that they are, to answer your question, but Australians, we're so used to these, duopolies, right? We've got the two big airlines, we've got the big four banks, we've got the two big supermarkets, those type of things. And I'd be really keen for your view on that. Why is it that way? When you look at there's greater competition in higher populated areas, yes, and maybe greater population increases the competitiveness. But if I think about the UK or the US or some of those, there's such a huge number. And there's not the same psyche.
Size of consumers, market, all that sort of
stuff. But what's the psychology of Australians that we go,
loyalty. It's an easy decision because I know all about them. So, but hey, they are all regulated by the same group and often underwritten or owned by a major brand who wants to keep their premium insurance brand so they can charge a higher price. And then like Qantas and Jetstar, Qantas, the premium product, Jetstar is the budget one. Insurance companies do it. Let's go into home loans because the inflation figure has just come out.
Oh, it has.
Core inflation for the quarter has picked up to 1%. It was 0.6% in the previous quarter. Annual inflation, core inflation, 3%, up from 2.7% the previous quarter. So this was something I was sort of been sensing over the last couple of weeks, bit out of step with the rest of the markets, saying, gee, the Reserve Bank's got really cautious and the 2 monthly, July and August CPI figures, higher than normal. Will it flow through to the all-important quarterly figure? And it has. So when the Reserve Bank meets on Melbourne Cup Day, I reckon there's no chance we're going to get an interest rate cut at all. Interest rates will stay on hold, but the Reserve Bank would be talking about, hey, is inflation starting to break out again? What's going on here? Is it tariffs?
Is there any sort of insight just yet?
There is a bit of.
I'd be very interested to see the categories.
A bit distracted.
You pull it up. I think that the categories are going to be
housing up 2.5% for the quarter. For the quarter,
wow.
Multiply that by 4 for the annual. Recreation and culture up 2%. Transport up 1.2%. Adam, who's just off to the side here, mate, can you look up financial inflation, insurance,
energy prices would be interesting
energy
as well.
prices as well.
Fuel, when we talked about that earlier. I mean, it's no chance of obviously being cut next Tuesday.
No.
Would obviously there's a meeting in December. Is there a chance that they would maybe hold and assess, or is now the time to strike if there is going to be an increase? And you hate to say it, I think you sort of mentioned it would be a nuclear option.
They will need another quarter above 3% for them to get really worried to increase rates, but no cuts next week, and we'll probably stay on the hold for another 3 months or so. But having said that, and everyone goes, oh well, mortgage repayments aren't going to come down. You can engineer your own cut.
You can.
Just by, number one, finding out how much you are paying on your variable. Let's keep it with variable mortgage rates at the moment. How much are you paying at the moment? How much should you be paying? What's the average?
Oh, probably a 5.25, something like that. Thereabouts on a variable mortgage. It'll be interesting to see if that changes over the next coming days. If banks start to get a bit jumpy around over the next sort of 6 to 8 weeks. But that's sort of the average. Now, you should be going
hang on, 5.2% would be around the best rate, wouldn't it? Be for a variable. Average is about 5.6, something like that.
Yeah.
So that's your general rule of thumb to go. If you're paying more than 5.6%, you're a bit of a mug at the moment. You can get a better deal elsewhere. So you've got to ring your bank, your lender, and say, if you're paying above that, I want a better rate. Also look for what your lender's advertised rate is for new customers.
Yes.
And say, hey, I want the new customer rate, thanks.
Yeah, I would be definitely prosecuting your bank first here. Be getting them on the phone, talking to someone, and then just really persist here. What do we say? Squeaky wheel gets the oil.
Yeah.
That's what you want to do. And then be prepared to walk the walk if you need to go elsewhere and shop around. The really interesting one, I'll probably throw back to you, David, now, and just thinking through, we're looking like a hold for November. Dare say nothing will happen in December. Fixed rates. Fixed rates are pretty competitive at the moment, especially the 2-year. If we're thinking, sometimes
what's the best 2-year? About 4 3/4 at the moment,
something like that. Yeah, thereabouts.
4 3/4%.
Yeah, best part of. So you're talking about sort of off an average rate, 0.75% difference between that and sort of an average variable.
So 3 interest rate cuts.
3 interest rates cuts. So you're banking that fixed rate is going to hold and be competitive over the next. I'm sort of just doing the numbers in my head right now. But say over the next 2 years, would you hedge your bets here? Would you split? Would you go fully into a fixed?
You've got to do the numbers yourself, but don't forget you can do a cocktail that you can fix part of your mortgage. 30%, 40%, 50%, depending on what you mean, what you want. But if inflation is trending up, rates are going to stay on hold for longer. So say you do a 2-year rate from now, end of October. So 2025. So that lasts to the end of October 2027. With inflation the way it is at the moment, there's unlikely to be any cut. If there is one, if inflation turns around dramatically, until middle of next year.
And then you got to think, you got to start. It gets complicated because you want to beat what you've missed out on in that time as well. So you really be talking about 4 quarter of percentage point cuts, or 5 potentially over that 2-year period to catch up from the head start that you're going to get with the fixed rate. Now, it is a really interesting conversation to do the numbers on, because we've been hesitant around fixed rates, haven't we? Because we've been going, okay, more rate cuts to come, but that 2025 hasn't played out how we thought it would.
I would be so bold as predict, and I have a mate who's an economist that said, Koch, if you're going to forecast, do it one of 2 ways. You either forecast regularly so you can keep changing your mind, or forecast so far into the future when people get there, they forgot what you've said anyhow. I would be bold enough to predict that over the next year, there may not be any cuts. Interest rates may be on hold for the next year. So anyhow, that's an emboldened statement from me because I picked this inflation figure right.
Yeah, well, no, you did. You said it a while ago. I mean, she's been cautious, hasn't she, Michelle
you challenged me.
I did. You
said, I think you're going to embarrass yourself with this prediction.
That's going to say. I looked at the unemployment figures, and obviously it nudged up, and that's sort of that wagging tail as well.
Yeah. Electricity prices, 9% for the quarter. 9% increase in electricity.
Now, that could be some of those rebates washing out now. So people
the electricity series recorded a rise of 23.6% over the past 12 months.
Yeah, I mean, the government's going to be looking at that. Wow. And there's a lot of talk, obviously, around sort of the renewables target and the like, pushing prices up. But if we're seeing this now, is there going to be stimulus? They won't want to because it could be inflationary, but that is significant, and that's hurting households.
Yep. So home loan, try and chase your own interest rate cut. don't take this Reserve Bank decision to keep rates on hold for granted, and don't accept it. Go and make sure you can get a better deal yourself. Just one last question. We got delayed on the inflation figure. Is it better to pay your insurance annually or monthly?
Good question. It will vary by insurers. Some insurers will charge extra, and it can be over the course of that period, depending on your premium, hundreds of dollars extra over the course of the year to pay monthly. So there will be a discount applied if you can pay it over the course of the, or if upfront for the year. Now, not everyone's got that cash flow to do it, but if you can, you might find a bit of a difference. That's right.
Great question here from TikTok about defined events versus accidental damage.
Yes.
How does this impact premiums?
Yeah, so accidental damage can actually be an extra sometimes on some policies, but a defined event, things like it could be storm damage, it could be flood, these type of things. So have a look, because those events are defined in your PDS, and it will talk about the limits that are applied to those events and how they are classified.
And do they change from insurer to insurer?
They can change from insurer to
insurer.
insurer.
So read the fine print.
That's right.
To make sure the definitions and the additions suit you.
That's right, yes, especially around flood. And there's been a lot of work that's gone into this, a lot of government involvement around flood
specifically.
There's a difference
between flood and storm.
And storm damage, flash flooding versus riverine flooding. There's all these different sort of classifications that you can fall into. Some are clearer than others. But others, you just really want to make sure that you're comfortable with it. So in that instance, you're not looking at your property inundated or affected in some way and pulling out your PDS and going through and finding out the worst.
Okay. Got to move through a bit quickly because we're running a bit short of time.
We've only been going for about 10 minutes, haven't we? Jeez.
Health insurance.
Yes.
Going back to the Household Budget Barometer, a third of Aussies have been with the same private health insurance for 10 years or more.
Yeah. Health insurance is a really interesting one. I think people are sticky with health because they sort of get a bit anxious and don't really know. Now this is community rated. So we've been talking about some risk rated categories.
Explain the difference there, because a lot of people would say, oh, I've got crook, or I've had an operation or whatever. So if I change, I better stick with my current private health insurance. If I change, my premiums are going to go up a hell of a lot.
No, so the way that the health insurance has to look at it, that is wrong. So risk rated, your car and your home, they're looking at you, they're looking at your circumstance, they're looking at your the claims that you've made, or it could be your house, and say your house, it might be different to your neighbor with the same insurer, even if largely the characteristics are the same. Your health insurance, no, for a healthy 40-year-old versus a 40-year-old smoker. That will be rated in your state the same. So do have a look around when it comes to your health insurance. Now, what's been really there's some recent investigation into it, is what they're calling phoenixing, which is where they'll pull down policies, private policies, they'll grandfather them. So if you're on that, you can't switch it and then try and get back to it. They'll dissolve it away and bring up a new product. Think like a phoenix coming back to life. There'll be a new policy under a new name. So it's one thing to look out for. But what I'd say around your health insurance is just go, all right, what are the categories that I really want cover for? In my wife and I's instance, we're not having any more children. In fact, we can't, David. That's a different procedure, though. That is that gold health insurance policy, not necessarily practical for us anymore, because there's categories like that we don't need cover for.
Okay. Gold. The only difference between gold and, say, a silver plus is pregnancy and
in-hospital psychiatric and weight loss surgery. Generally, and
pregnancy is the only additional coverage. Between gold and silver.
And look, insurers,
and the premiums are huge.
The premiums are huge because I think what insurers are finding, right, is that in the lead up to having kids. You've got to get these policies. I should actually clarify before, if you want to get gold cover, you've normally got to get it 12 months out. Say you want to get something, even if it's a hip replacement, you've got to ensure you've had continuous coverage for 12 months before you can claim on that.
Yep.
With your insurer. So in the instance that if you want to have kids under a gold policy, you've got to get it 12 months out before you fall pregnant normally to get coverage for that pregnancy. But what people do is they then have the child or they finish having children, they then switch back. So insurers are saying, oh, how are we juggling this increased cost of private, obstetrics, maternity, etc. So gold cover has increased, more than the average over the last couple of years. But yeah, you've got to look through that fine tooth comb. Even your extras, there's so much on there that people go, oh yeah, well I might do that or I might do this, and then over the course of 3 years go, I've never done it once, and they're paying can be a really high premium for the privilege of claiming on it.
All right. So worthwhile checking around. Make sure your private health insurance is tailored to what you want. Chris Ford, Bill Guru, thank you for joining us.
Yes, don't know about that, but thank you very much.
Right. It was fantastic. Check out comparethemarket.com.au if you want a good comparison site to compare for better deals. Check out Your Money and Your Life TV segments where you can see where we've helped families save thousands of dollars. You can run through their story as well. And every Friday, I put out a Money Digest newsletter that can go into your inbox absolutely free. There's a link in the chat if you want to subscribe to that. And I run through the important things I think you should know about money, and it's bill comparisons, but it's a share market, it's property, it's insurance, it's inflation figures, all that sort of stuff. The money issues that you need to know, and you can understand it as well. So subscribe to that newsletter in the chat link there as well. Thank you for joining us for this Your Money and Your Life Facebook Live session. Hopefully you enjoyed it, and we'll see you again very soon.